80K or new all-time highs, which one is next? That's the $1,000,000 question, and I will answer that for you in this video. So stick with me for 10 minutes and you'll get your answers, and you'll get a lot more because I will run you through what happened during this downtrend and are we likely or not to reverse from here. Now, the first thing we have to understand about this trend from starting from 3 days ago is this is a strong downtrend. And the reason I say this is because, well, I look at the open interest and I look at the delta of the move, and if I go to the 4-hour chart, you'll see that this move down happened from 102.6k, and the open interest, which basically means the people in the market, in the derivative market, have been increasing and kind of going steady at the end as well. So right now, as we speak on 9th of January, there has not been any sign of weakness from the downtrend yet. Does this mean this, it can't reverse from here? Yeah, it can reverse, but it's just the odds of a full-on reversal is low. Well, I've taken some scalp longs in this market, and I have one from 94k aiming for a take profit one at 96k as well. But overall, what I'm seeing right now is the downtrend is strong. Then I say that because the open interest has been going up and sideways, which is pretty healthy for a downtrend. Now, when I look at this chart, what I see, first of all, is this support level here, which is basically $90,000, have been tested a lot. It has been tested here, has been tested here, 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 and now it's the 6th touch of the same support level. Now, as you know, as a support level gets hit more and more, that level gets weaker and weaker. And this was the range I given to my followers on Twitter 2 weeks ago, and it's been the case for these 2 weeks. It's been a pretty good range so far because our range high has clear resistance and our range low has clear support, and let me run you through them as well. Now, the first thing I see on this chart is I look at my daily levels, which if you don't know what they are, go and check the video about them. They're pretty powerful. And the first one I have, which is really important for me, was right here at 92.6k, and we had a beautiful tap from it yesterday. As you can see, it created an amazing reaction of over $3,000. That was really good, but now it's been tapped, so it's not important for me anymore. Now, the levels that are below us, we have one just below $90,000, as you can see right here at 89.9k. That means that we would sweep a lot of liquidity from 90k, so that's an important level right there, and I always mark them down. And another one we have is coming here at 87.3k. And the reason I marked this level, and I had this level from the beginning, why this is important for me, is because this has seen a lot of absorption. If you go back on the XR chart, you will see that this level, when we tapped it, we have seen 200 million negative delta. And that means that a big player and big players have absorbed those short positions with their limit long. So a big player has bidded on the price at these levels here, and what we know from big players is if they use a level, they usually use it more than once. That's why these kind of moves happen more than once as well. So this is a level that you should have on your chart, and it's really important, just like this one right here. Now, when it comes to resistance and the levels that I'm interested in shorting the market, if I'm being honest, on this downtrend here, I'm not interested in many shorts because the move has already happened. There is nothing for me to be greedy about. There's nothing for me to eat in this market when it comes to shorts. But a single place that I'm interested in a short is this weekly level right here. As you can see, a green candle followed up by a red candle right there, and that comes beautifully at our range high. So if we see a push above our current high of this week, and if we see that weekly level hit, I will be looking for CVD divergences and open interest increase, and I might take a position like this if I see a clear sign of bearish absorption. Now, that is the only short position I'm interested in as things stand. I'm not interested. There's a lot of levels we have here as well, but I'm not interested in shorting them, and I don't think you should be either at this point because we have already seen that violent move down. And for our levels below, same goes for the levels here as well. So if we are to see a failed auction, like we tap this level and then we reclaim the range, then you can get into long positions like this or like this, depending on where that wick comes at, and aim for the range high or all-time highs, depending on your own strategy. Now, Both of them are good trades, but it's again really important to remind you that these levels have been tapped many, many times. So it's weak. The chances of us having a full-blown reversal, even if we get a failed auction of these levels, are statistically low. So if you see a great failed auction below these lows, take the long, but take profit early, because we've seen it many times where we have a failed auction, we go below 90K, we go to 88.5, we reclaim for a couple days, and then have a really, really strong push down. So you don't want to be caught during that move down. So if you long it, please take profit fast and then just let the trade run. Now, if we are to break these levels and go below them, there is one level that I'm really interested in below our $85,000 range, basically this price action going on for 2 months, that comes from XR charts again, where if you look at the the daily naked point of controls here, the NPOJ levels, you will see that we have 3 levels back to back at around $80,000, and one of them comes at 81.8, one of them comes at exactly 80K, and the other one comes at 76.4. Now for me, the important one here is this one right here at $80,000. And the reason is we are seeing, you can see from those NPOC levels, this one happened, and this is a NPOC of a ranging day. So a lot of the volume actually is packed here from that day. And this one right here, you can see it's from a day that had a $6,000 push up. So the amount of volume packed here is not nearly as much as it is here. So that's why I love to use that $80,000 level. I will mark it on my chart. That will be the first level I look for if we are to go break down from this range. And that will be the one I will be looking for some CVD divergences and basically some absorption at that level as well. So I will mark them on my chart. Please, you mark them as well. And one more level below this is another weekly naked point of control that's coming at exactly, I believe, $76,000. Let's quickly see it for ourselves. Right here, yeah, at $76,000. So if this breaks as well, again, the next level I have is at 76K. It's an important one as well, because below this, the chances are we're gonna see a really violent push down. So yeah, I truly believe this is the last level we have when it comes to protecting the bull market, because below this we might just get a longer and more, steady sideways price action or a downtrend. So these are my levels that I have on my chart that are important for me. And if I'm putting up only 3 levels on my chart that will be important, I will 100% have that weekly level with me, because that is my bread and butter when it comes to a short. I will also have this 87K here as well, because again, that is a really important level. And then from these 2 levels, I believe the 80K one with the $80,000 liquidity is the most important one as well. So I will have these 3 levels, and I tell you the same thing as well. Please have these levels. They are really useful, they're really technical, and they work really well. Now, the final thing I want to talk about is about this range we have for the last month. What you see on this range is if you go to the open interest chart, what you will see is the open interest has been increasing steadily during this range, which shows us that the amount of contracts, derivative contracts in the market have been increasing during this range. And what that means is and let me quickly show it to you before I explain why that is important for us. So as you can see on this range right here, on this sideways price action we had, the open interest have been going up pretty good, pretty steadily as well. And why that is important is because if we are to see a breakdown from this range, the longs that have been long in the market here, or at these prices here, they will have to be liquidated or stopped out manually, which will push the price down even lower as well. And same goes for if we are seeing a push above this range high as well. If we are to see a breakout, the chances are statistically that push will actually be an actual breakout, and same goes for that breakdown as well. This will be the sixth touch of the same range low, and a lot of open interest in that range. So statistically, if we are to see that breakdown, yeah, most likely the outcome is it will stick. So please, if you are to take a long position, take profit early and make sure that you have correct stop loss placements. Then yeah, that is it for me. I hope that was helpful for you. If you like it, if you want more of these every week, please like the content, subscribe if you want to as well. And if your goal is to be a professional trader and you want to do this full time, just look at the link in my description. That could be helpful. And thank you so much. I will see you next week. Bye bye.